What's up, guys? My name is Troy, and this is Growing with Troy. And in today's video, I'm just going to show you a strategy that I've been using to paper trade as well as live trade. For paper trading, it's been going well. For live trading, it's been up in the air. We'll just say that. But this is one of the strategies that I've been using. I like the strategy. It's pretty simple, not much to it. It's called the ABCD pattern. I got this strategy from the book How to Day Trade for a Living by Andrew. I talked about that book in one of my other videos. But it's like I said, it's a really simple strategy that I've used, and during paper trading works. During live trading, I think it's more of a psychological thing that has been hindering my trading. But I'll still explain it to you guys just to see if it may be of use to you guys. But I'm still gonna explain it. So A, B, C, and D. So A should be at a low point if you're in a buying market and a high point if you're in a selling market. And then B should be at a high point if you're in a buying market and a low point if you're in a selling market. C should be in between A and B. And then D, I just set aside, but D is going to be like your price target. But what you're looking for is a strong trend up or down. In this case, we have a strong trend up. Um, and we have some type of retracement, which is labeled as C. But how do you know how far of a retracement that you want to go? So for me personally, I like to have a retracement in between 50 and 38%. I'm using the Fibonacci extension tool out of MotiveWave, but usually around 50 to 38%. That's what I like. But once you get down to like that 23, that 14%, retracement, that gets a little more riskier. Will I still make a trade that low? Possibly. However, it becomes a really risky trade for me. But once you pass A, this A B C D strategy does not work. So if C drops all the way below A, no, that's not the strategy. You want to make sure that C is always in between A and B. And like I said, I like it between 50 and 38%. So where do you want to enter this trade? So you want to enter this trade any point between C and B, right? Preferably closer to C. For me personally, preferably closer to C. However, at any point between B and C, you want to try to enter the trade. And your D is going to be your price target. So this is where you're going to exit the trade. D could be at 100%. That's usually where I set it. I usually enter around like 50 to 60% and then get out around 100% if I can. Or sometimes I will also not set a price target and I will just set a stop loss to C. So if C hit 50%, I'll try to get in around that 60%, set my stop loss at C or at 50%, and then just move my stop loss to secure profit. So if I'm going up, so let's say the price goes all the way up to like 78%, I'm moving my stop loss to break even. And if it's going up to like 80%, I'm moving my stop loss to secure profits. So it's kind of like scalping a little bit, but D could be whatever you want it to be. Whatever price target you want to set it at, you can, set it at that price target. So it just kind of depends on the market. So that's the strategy that I use. Thanks for watching. My name is Troy, and go ahead and comment down below and tell me any strategies that you guys may use. See ya.